Now we're going to turn to Europe and look at what's happening within the European theater. You know, things have gotten a little bit better. Obviously, they're into the reopening phase, which is obviously a net positive for activity, which we've been talking about in terms of, but what happens next? And that's where we start looking at inflation. You know, what is the consumer going to do, and what do exports look like? Because exports are a big part of, or at least a big core to, that German factor. So first, we want to kick off with the Ecb balance sheet, which is back at a record, moved up to another record of 7.657 trillion, which just speaks to the support that continues. They had another bump up in PEPP purchases, which is something that we're going to talk about a bit more as, again, trying to create the drive forward when we look at not only just inflation, but also in terms of monetary and fiscal support at the government level, which I think is going to be very important. Now, obviously, when we look at Euro area economic confidence, you can see this big jump across the board where, economic sentiment is now well above pre-pandemic levels. You can see, and again, speaking to why we were getting more bearish in 2019, you can see how things were really starting to decline into 2019. You had this last little kind of hurrah going into the end of 2019, and then obviously things, or I should say coming into 2020, and then that obviously got derailed. But some of the other components, when you look at really across the board, industry, services, consumer, are all getting back to normal. The one that has lagged versus the other three, still above pre-pandemic levels, is the consumer, which speaks to how much mobility will they have, how much are they willing to spend, and what does that mean for jobs and spending and just travel within the EU in general. So then when we shift and look at it a little bit differently, we just want to look at China official manufacturing PMI. China and the Eurozone in general are fairly linked in different ways, where the China typically leads the Eurozone level because the China imports a significant amount, and there's a decent sized trade relationship, which is why there's always so much connection, and there was that push for the trade agreement, which has now been sidelined due to the issues with human rights and just where this is going to sit in general. So, but the most important thing is that we've seen a slowdown in that official manufacturing PMI, and we expect to see the Eurozone come down as well. But with that being said, there are some factors within the Eurozone manufacturing PMI that are also in the U.S. one, where issues with supplier delivery times, input prices, all of these components that that show an expansionary number are still there. So while the China number will put pressure and gravity on it and act as an anchor, it's still not going to bring it all the way back to those levels. It's just going to see a bit more of a normalization as China imports less, and that becomes more of the headwind than anything else. So then when we look at surveys, signal a reopening, leap in core inflation. So the problem that's going to come back into life, because when you look at selling price expectations have exploded to the upside, you've already seen that move through. Again, something very similar to what we've seen in the US is playing out in the Eurozone. The problem is the jobs numbers or the hours worked is actually much worse in the Eurozone than in the US, and the US isn't exactly strong. So that's why, even though the expectations are there, it's still even, and I'm someone who thinks inflation is here, it's real. I think you're going to see a little bit of tempering in general. The core inflation will go up, but it won't go to those levels. And I think it's going to look something actually quite similar to where we were in 09 and 10 in terms of that move up, where we're going to get that pull, but it's really going to be capped. I don't think we'll see that move like we saw in 07, 08. Now, given a lot of things can change, you could get a surprise to the upside. You could get some pricing increases to the upside. But here, I think you're going to see kind of this get a little sticky at about 0.6, 0.8. Still be, I think, at the higher end of where we are in 11 and 12, but still still kind of then goes sideways, and again, getting more of that stagnation versus that continuous inflation. Then when we turn to the PEPP that is kind of driving this, last week the ECB conducted gross PEPP purchases at the second highest pace ever, 25 billion euros over 4 days. But then this is coming from Fred. We shouldn't look too much into weekly data, but it does fit some views that higher bond yields could be related to expected changes in asset prices. So this is coming from Isabel, one of the ECB individuals. So when we look at, but it's not surprising because after that March meeting, they said they were going to accelerate, and they just held to what they said they were going to do. It's just seeing kind of that last surge, and I think this is that last push to make sure that when reopening happens, there's some of that momentum behind it that's coming from the ability to ease, having that monetary support to try to make a bit more of that sticky, which is why when you start looking at, okay, well, what is going to be the offset? Well, the Euro area manufacturing input prices were revised higher in the final PMI and delivery times lower, which means that the delivery times got worse, pushing the pipeline inflation pressure gauge higher. Now, typically, this kind of level means that you should be increasing your ECB refinance rate, or the general rate, to up by 50 basis points, or at least 25 basis points. And we're just obviously not going to see that, because they're going to try to, again, support that move higher, and it's still below the inflation gauge that they've been targeting. And because Europe is a little bit behind the US, I still think that this pressure gauge is going to continue to go higher, and you're going to see more pressure to the upside, but you're again going to see some of that support remain and inflation running a bit hot, which is why I do think, coming back to the charts two charts ago, that you will see again that pull up. It's just things in you're going to get consumers rejecting prices much sooner in Europe than elsewhere, because you did get an increase in savings rates, you did get an increase on that level. It's just not to the same percentage that you have in the US, which is why I think you're going to see a little bit of a cool down happen faster in Europe than in the US in general. And this is just looking at the monthly buys that have risen over that 85 billion euros on that steady move up as the stock of purchases continue to shift higher. But when we look at the reopening, when you look at Germany, for an example, you're now well below that trigger for tighter curbs. So that's why we're going to get that reopening. It's going to happen over the course of really the first 2 weeks of June. We've already seen it in restaurants. We've already seen it in open table data, which we'll talk about tomorrow in the EIA show. But again, you're starting to see some of that normalcy come back. It's just how much are they willing to drive? Or is someone in Germany going to go visit France? Or is it going to stay fairly local like we've seen previously? And I think just based on the pressure points that we've seen throughout Europe, not just talking Germany at this point, you'll see people do more, but within a tighter restriction, or at least a smaller area. So you'll still see activity pick up, but it won't be the extensive travel that I think is maybe expected or that we've seen in previous cycles. Now, this is just looking at the aggregate of the Eurozone, where we look at consumer confidence, still negative, but moving in the right direction, as you see all of the other sides of the economic confidence, industrial confidence, all of that shifting up. Now, the Eurozone manufacturing index, when expectations were 62.8, came in at 63.1. Again, all of that driving up, but it's at the expense of the same type of negative drivers that we've seen in the US, which is why we still expect that core CPI continuing to move up, which, if you just look at all the leading indicators, all of the movements are going to be pulled in that direction. Then when we break it into some of the key components, one of the bigger issues is the consumer confidence in Germany, which is actually getting a bit worse. Now, while it's getting worse, it doesn't mean it's derailing the recovery, because what do you have happening in Germany but a presidential election? And typically people feel less confident going into an election, because who's going to win? Is my candidate going to win? Well, I don't feel as confident as I did, so I'm going to wait or hold back, which is, again, something that we've seen. But import price index has shifted higher again. And this is talking April, which we know has gotten worse in May. And then based on everything we know about June, it's not going to get any better. So all of that, again, leading to more CPI, more inflation as those prices continue to get pushed through the system. Then when we look at German manufacturing, it's still maintaining that elevated level. Positives in there, don't get me wrong, but again, some of the negativity in terms of import, in terms of prices paid, delivery times, all of that is leading to some of these inflated numbers. Still expansionary, but still pointing to more inflation coming through the European system. Then when we shift into Italy, where we're starting to see a little bit more activity, Draghi's in charge, people are feeling good about where the direction is. There's more stimulus coming, there's more coming down into the Italian markets, which is why consumer confidence, manufacturing confidence, economic sentiment is all surging higher, all leading to that strong growth side. But then it comes down to, well, how strong and how much of that is going to be inflated. And that's when you turn to PPI. PPI is trending higher again, which then obviously this is April. So when you look into May, PPI is going up again based on everything that we know about the current supply chain, which even though CPI missed to the downside, again, still elevated, we think that that's going to reverse back up as a lot of that is passed through the system, especially when you look at where PMI is. Unemployment rate was obviously a little bit worse, but then the GDP side was on the year over year, a little bit better than expected, quarter over quarter, a little bit better than expected. But the budget got worse, which, given the budget deficit, it's not surprising because they're looking to have another round of fiscal stimulus, which again leads to higher consumer confidence, higher spending, but a worse budget, which is why PEPP is going to continue to go higher because, again, trying to promote some of this spending to get things kind of normalized over time, which is going to lead to a higher PPI and a higher CPI. Then when we round it out with France PPI got a little bit lower, which is, again, something that we think is going to reverse as we look in May, but consumer spending actually declined, where it went from the expectation was for down 4%, came in down 8.3%. This will reverse in May because things got a little bit better in May. They had some additional lockdowns in April that ate into that. But even with that, we, again, speaking to that growth level, we expect CPI to pick back up, and that additional lockdown towards the end resulted in GDP missing, where PMI continued to go up. Expectation was for 59.2, came in at 59.4. Some of those negative drivers are in there, which is why France is in a slightly worse situation than Germany, but still, again, the two biggest economies, I think, are waking up, but in different ways, and some of them positive, some of them negative. And that's why we still remain a little bit concerned in terms of, well, how much economic growth are we going to see? How quick is that turnaround going to be? Which, again, kind of leads to some of these uncertainties with growth rates, especially when you look at two of the largest economies in the area. And then when we look at the Italy and some of the consumer confidence levels, so when we look at Italy and French consumer confidence, Italy obviously surged higher, still below peak, but back to pre-COVID levels, where you're just not seeing the same activity in France, which, you do have election cycles coming through. You have some of that uncertainty as well. So Italy has really become the driver, where France and Germany has slowed down a bit, still moving in a positive direction, but not to the same level. Like, they're nowhere near pre-COVID levels, which again leads to, well, how much kind of that movement can we expect in the European markets? Now, Italy manufacturing and French manufacturing both surprised to the upside. So even though the consumer's expecting a bit less, the manufacturing side is expecting a bit more. And that's where we do think the manufacturers are more right than wrong versus the consumer. The question is going to be at what price? and how much will they be able to push through some of the rise in inflation or the rise in cost. And that's that back and forth. And we think that, obviously the consumer will take down some of it, but it won't be to the same level as the US because they don't have the same cushion that the US has built up. And I think that's some of the disconnect, which is why Europe remains a bit of a concern, especially when we look at that backdrop of pressure, because Europe actually sells a decent amount into China and Asia in general. And China actually, so more of the rich Chinese don't buy made in China. They actually like European goods. And as a German car snob myself, I get that. But when you look at the Chinese buying, which we're going to talk about in the next segment, it's come under pressure again, which I think is going to reverberate back through the system and cause some overarching issues with the Eurozone in terms of where that growth is going to be. Now, it will grow. I am not saying that we're not going to see growth out of Europe. I just think that it's going to be below some of those estimates that have been out there and some of that positivity that has been circulating overall. But now in the next segment, I'm going to go into what we're talking about and how that's being influenced within Asia.